Donald.
And I'm Bill.
And we're the real estate agents of Miami.
Welcome to another episode of the Real Estate Agents of Miami. My name is Bill.
My name is Donald. Today we're going to talk about 1031 exchanges.
If you like this video, click on the bell at the bottom of the page, follow us on Instagram or Facebook, or just give us a phone call. We'd love to hear from you.
So let's explain what a 1031 exchange is. A 1031 exchange is an exception to the IRS tax code that allows an investor to swap like-kind properties. So let's talk about what a like-kind property is. A like-kind property doesn't mean it has to be condo for condo, single-family house for single-family house. It means it has to be like-kind in the eyes of the IRS. As long as your accountant has been accounting for this property as an investment property on your previous years of your tax returns, you're able to sell this property without having to pay the capital gains taxes today, and basically you move your gains from this property into a secondary property and postpone the payment of those capital gains.
So you have, once you sell your property, you have 45 days to find another property and identify that property, and you have 180 days to close on that.
And sometimes things happen along the way. Maybe the property that you identified in the first 45 days, something goes wrong, they can't close, some big problem came up that can't be solved. You can go back to the IRS and replace that property with another property as long as it's similar in nature to the one that you originally identified in the first 45 days. So let's talk about the advantages of doing this. If you were not going to do a 1031 exchange and you sell your first property, you're going to pay capital gains off of the money that you made off of that first property. So when you go to buy the second property, you have the amount you earned minus your capital gains. But if you do a 1031 exchange, you're able to move that whole amount of money into your second property. You're eventually going to have to pay taxes on this when the ultimate property is sold, or you give it an inheritance to your family, whatever may happen, but you were able to make income off of the IRS's money all those years by doing this.
You have to engage a facilitator when you do this. That's an outside person, unrelated, that you haven't done business with in the last couple of years.
2 years, exactly.
And they'll collect the money at the sale of your property. They'll distribute that when you're ready to buy the new property. But this is a party that the IRS, so everything is located together, and the monies are all together. They don't want you to use this money for anything else during the process of going from one property to the other.
You're not allowed to touch the money. And that's one thing that could disqualify you. If you were to pull some money out of the first property prior to doing the 1031 exchange, it may disqualify you for the 1031 exchange. This is why when you go to closing, you sign the documents, no check is coming to you. Everything is going to your facilitator. And your facilitator is going to maintain this money until you close on the secondary property. Now, just because you do one 1031 doesn't mean you couldn't do 2 or 3 or 15. So I have some investors that may be on their 5th or 6th level of a 1031, but they still have never sold the property. They keep rolling it into a subsequent property. And like I said, this is actually helping you amplify the money that you're able to use in order to make some return.
Yeah, you could buy an expensive property. Maybe you started with a condo as an investment, and by the end of this process, you own a commercial building. All those things are possible. We know friends that have done that as well.
Just make sure you talk to your accountant before you do this. Your accountant's going to know the way your property was listed on your income taxes for the past several years. They're also going to know what your tax rate and everything is, and they'll be able to advise you if you're right for a 1031. If you make sure you get a good realtor who understands the 1031 process, a good attorney, and make sure that the attorney is able to refer you or the realtor to a 1031 exchange specialist.
All right, y'all, that's all for today on 1031s.
I hope you guys enjoyed everything. Make sure if you like the video that you click the bell at the bottom of the page. You can follow us on Instagram or Facebook. You can even give us an old-fashioned email or phone call.
Thanks, y'all. Have a
Bye.
good day.
Have a good
Bye.
day.